hope you can hear me. There's a lot of construction happening here. This is always a work in progress down in the centre of Cairns. I don't know what's going on, but they're taking forever to do this landscaping. Yeah, just did my supermarket shopping at Woolworths, which is unusual because I normally go to Coles. But I got what I wanted, and there's a deal on. I'm going to get $10 off my card if you spend over 30. One of the first 40,000 people to do that with a David Jones card. We'll see whether I was one of those 40,000. It was only about 48 hours ago at the most, so fingers crossed. But I'm not here to talk about my supermarket shopping. Actually, here today I want to talk about the stock market again, a bit of an update. Speaking of Woolworths, they've actually been put into a trading halt. I don't know if that's such a good move. I don't like the sound of it. Apparently there's going to be some information on the Masters acquisition, or the dumping of the Masters chain. So hopefully they're not doing it because they're worried the market will be totally spooked, because Woolworths has actually been recovering a bit. It's still fairly low compared to what I bought it at, but it's creeping up there, so fingers crossed. But it is the reporting season, and once stocks go ex-dividend, they will drop off a fair bit. It happened to Telstra today, and they were savagely punished when they went ex-dividend, about 3% down, which is really huge. But anyway, might be a good buying opportunity there for someone. But what I wanted to talk about today was IAG. I've got 2 parcels of IAG shares that I actually sold off a couple of weeks ago at around a little over $6 a share. I'd recovered to a decent figure. I was happy with that because one or two reasons. I want to get rid of my stock that I'm holding with NAB. I want to keep it all with ComSec now, just to make things tidier. So I was happy to sell that stock, and I had one lot at ComSec as well, so I got rid of both of them. I both over at $6 a share. Gave me a profit. I ended up with about, I'll say $550 clear profit on the deal, so that was nice. And I thought that was as high as it would go, given the charts. You know, this is the thing I haven't mentioned, but you know, traders of course are always using charts and looking at the history to work out when they should dump shares or when they should buy shares. You know, going on that sort of experience for those decisions. But you know, it seemed logical to me that that would be a good price, but they kept going up, which really pissed me off. It went up to $6.14. So what that meant was there were hot little profits that I missed out on. If I just waited another 24, 48 hours,
point is, ladies and gentlemen,
I could have had those extra profits if I'd sold the right time. After that, the price plunged, which was interesting. Anything can happen on the market, and this is weird because they're going to go ex-dividend themselves in about a week's time. Normally that would bolster the price of the stock, but IAG shares actually went right down. I picked them up under $6. I got them for what, about $5.75. I bought one lot, and then they kept dropping, and I was able to pick up the second lot at 10 cents lower, so $5.65. But on top of that, they dropped even further down to $5.75. 5.5, yeah. They dropped down another 7 cents anyway. So I didn't get the bottom of the market, I didn't get the top of the market, but I made a profit and I got my shares back. I'm going to get the dividends, and I've also got the profit in my hand. So it's actually not a bad outcome overall. But I guess the point is that you don't want to miss out on your opportunities. Don't get too greedy, because you can miss out. Running parallel to that, my Worely shares have been taking off because the oil price has been going up. Now they dipped down to $4, which is absurdly low, and would have been fantastic to buy them at that rate because it's an absolute bargain. Now just recently they went up to about 960 I think was the high, something like that. I didn't sell them, and they've dropped back today. And well, they dropped back yesterday, and they dropped back further today. So I could have again banked another 500 in profit, but I was getting greedy and expecting them to go over 10, which they'd done before. But of course, you just don't know the market. That's a cautionary tale. So I had no idea.
Anyway, I've probably got to go back in, mate.
That's a bit rude. He's talking to his device. It's not fair. I thought I had run of the place. So anyway, yeah, I missed out on the high price to sell, and I missed out on the lowest price, but I got a pretty good average price when I bought them back, and I made a profit, and I will be collecting the dividends in a week or so's time. So, you know, it's not a bad outcome, really. I mean, of course, there could be something happen to an insurance stock. So, you know, you have a cyclone up here or anywhere in Australia, and they could be paying out big time, or some other natural disaster. You know, insurance companies are open to that type of thing. Something Glenn wanted to avoid. He didn't like insurance companies to invest in. Their rate of returns probably aren't as good as the banks, so I suppose I can see his point. But they're still a pretty solid investment, and so far that stock's been good to me. But the reason I went with it is because I know it. You get a feel for a certain type of stock, and I think he's the same way. You know how it's going to act to some extent. You never fully know, of course, because anything can happen. But they do have personalities. And mind you, it surprised me when IAG dropped. I was really surprised by that, but I couldn't ignore it. I had to bite the bullet and get those shares back, because I'd get them back at a discount. And I thought, well, why not? So if it's an opportunity lost, I lost the opportunity with Worley. I could have made that profit, and if I had, I could have waited for their price to drop back and used them as trading bait, waited for them to drop a few more cents, dollars, whatever, and I could have had you know, a nice tidy profit there, because that's a type of stock that moves a lot. I'm well aware how Worley's operates, and it's a stock that can move by 3% a day, 3, 4, 5% or more. It's not unusual for it. It's very speculative. So, you know, you got to know your stocks and how they operate. That's one of my big tips. You've got to get to know what you're dealing with, and that just usually takes time. And I'm not the smartest guy on earth, so it takes a bit longer for me than, say, others. But you do need to know what you're dealing with. And it may seem strange to say that stocks have personalities, but I really believe they do, and Glenn agrees with me on that one. So, but the other tips, sorry, right at Sheridan Street, a very busy intersection. It's not normally this busy in Cairns. It's a pretty quiet place, but yeah, no price of guessing where they're going, North Cairns to the hospital. Anyway, what I was going to say is that if you're new to the market, make sure you take advantage of getting your free trades. And what I did was I traded with both NAB. I started off with NAB and I got about 10 free trades with them. So you don't have to pay your brokerage, which is only a small amount, but you know, what the hell, it's an extra cost. If you can avoid it, why not? So I did that, and then I also joined up with ComSec, which is a much better platform in my opinion. I just think I wouldn't trust NAB. It's just not as reliable. I've had issues with just making buys and sells through them. The ComSec has more stability. There is one advantage though with NAB trading, and that is you get a live screen. So that's handy. You can actually see the movement of the stocks in real time. With ComSec, they charge you for that unless you made a certain number of trades per month. So, well, I think that's how it works. You might have to pay anyway, I'm not sure, but one way or the other, if you don't do anything, they definitely will charge you for that privilege, which is actually free on NAB. So I use NAB's, well, bloody almost ran me over with this. So NAB, I use NAB for the live screen, to get live updates to the prices, and I use ComSec to actually put my trades in, you know, to buy and sell my stock, because those are the different strengths of each of those platforms. So that's how that's my tip for the day. But you know, I haven't really been active in the market for a long time. I've basically been in hibernation because I really haven't had the cash to do anything. It would have been perfect if I could have also sold the Worleys and got myself extra cash, as well as selling, and then buying back those IAGs at a profit. That'd be perfect. That's a great thing to do, because as opposed to just sitting on your shares, nothing happens. I was creating a situation where more wealth was created. So yeah, it gives you the impression Cairns is busy. It's not. I'm just copping a lot of traffic here at the moment. It's ridiculous. Oh, there we go. Yeah, they won't run me over here. I've still got enough time. I'm sick of all the noise. Yeah, I'm not used to it up here. It's Sleepy Hollow generally. So, as I was saying, I was in hibernation, and due to the fact I didn't have any cash to splash on shares, so I didn't take a great deal of interest in the market. But now I'm getting back into it, checking out the ASX site, which I've told you is excellent. You can get a watch list happening there, and it'll give you all the dividend information that you require. And that's important. You need to know when the divs are going to be, when it's going to go ex-div. So your stocks are going ex-dividend, so you can say purchase them before they've done that. If you want to take advantage of those dividends, you may be better off, mind you, just taking the profit, getting a lower share price after they go ex-dividend. I mean, the Telstra shares really dipped big time, so whatever dividends I'm getting from Telstra, I might have been better off just waiting and ditching a few and buying them back. But the trouble is, my Telstra shares are too expensive. I paid too much for them. I paid too much for my banks. It drives me crazy, but I'm just hoping for a major recovery in the market, so I can actually get rid of these expensive shares and try to get myself down into a low cost structure, which is essential really. I have got a major option in the pipeline. That is, I'm actually going to be selling my flat in Melbourne, and that will provide me with extra cash until I decide what to do with it. I might buy a place up here, but in the interim I'm going to have quite a bit of cash to splash, so that'll change the parameters. But I'll still be careful looking at the price I'll pay. I'll be ruthless. You have to be. You have to really be hard-nosed, as I've said. Don't be a mug. So anyway, that's the latest. It's all fun and games with the market. Hopefully my Worleys won't totally tank again. I doubt that, but you just never know. Kicking myself I didn't sell them, but you're always living and learning, always. So again, hopefully this has been of some help. I've noticed a few people have watched the other video, even though it was a long one, so I only hope that you enjoyed it, and I'll keep giving you some advice.